My name is Jeff McCann. I'm founder and chief executive at Apollo Insurance. We're a privately traded company based out of Vancouver, British Columbia. So quick profile, Apollo is Canada's leading online insurance provider. We launched the business in April of 2019. We've been able to build the largest selection of online insurance in Canada with US opportunities on the horizon. The premise is pretty simple. Speed matters in today's world. Everything's online. It never made sense to me that you could get a pair of pants from the other side of the planet faster than you could get an insurance policy, which is just a promise on a piece of paper. So when you're going to buy insurance from Apollo, you're able to answer some online questions from a chat-like interface, get a quote, pay for that policy, and it's going to be emailed to you directly in real time in less than 5 minutes, 24/7 from any device. Our go-to-market focus is targeting underserved segments of small business and personal insurance because these customers are largely ignored by the existing market, creating an opportunity and a gap in the market for Apollo. So if you're a small business, you need fire insurance for your lease, you might need professional liability. If you're an individual, you need homeowners insurance, you might need renters insurance for your landlord. These are the types of products that Apollo sells. Right now, only 1.3% of Canadian insurance is sold online. And so we're very much at the beginning of an innovation life cycle in a tremendous industry. So what we've seen in other areas of fintech with online banking, none of that's really touched the insurance space yet. And so it's very early in this life cycle. And this is really how insurance is sold today. And this isn't stock photography. This is an actual picture of an insurance brokerage office. And really it's people printing emails, printing policies. It's if you're a small business today, you're going to have to fill out a bunch of paperwork, send that off to a broker. They're going to send that off to a bunch of different underwriters. There's all this back and forth in paperwork that takes up to 6 weeks to actually get your policy and have it paid for. And as a result of insurance being mandatory, it's a massive market. Canadians spend about $66 billion every year on property and casualty insurance. The US market is about 10 times that, about $600 billion. And globally, it's one of the few trillion-dollar industries. We estimate there's about 40 million Canadian insurance transactions that are less than $10,000. So these are just ripe for a digital disruptor. There's also tremendous tailwinds in our segment. So I fundamentally believe there's going to be a renaissance of entrepreneurship coming out of COVID. We're already seeing a record number of small business starts. Prices are going up because of inflation, and if lumber is more expensive, your insurance is going to be more expensive. Insurance is mandatory, so as businesses and individuals, exist in their ecosystem, they're going to have to buy these policies. And we're also seeing a record number of housing transactions, and every time someone gets a new mortgage, they're more likely to be shopping and buying insurance. So our solution is almost obvious. It's pretty straightforward. By using technology, we create a better experience for both insurance brokers and customers. The application is totally online. It's mobile friendly. You're going to get an immediate quote right there from the technology. You're able to buy that with your credit card or debit card. You can pay monthly or annually. And you're going to have a policy emailed to you immediately with no human intervention from Apollo. So Apollo is actually underwriting these products. We're not taking balance sheet risk. We work with reinsurance companies or Lloyd's of London in the background to actually take the balance sheet, but we're able to underwrite, price, and sell that policy directly from our technology. We automate the renewal process to keep a sticky, recurring revenue stream from these customers. And obviously, we collect so much data that there's opportunities for artificial intelligence, machine learning algorithms as we build out our data set. So how it works is pretty simple at its core. We recognize an underserved segment that might be health and fitness professionals, might be barbershops, tech companies, and emerging segments. And we build an online insurance product. So that's the questions, the pricing, the eligibility. And then we find an insurance company, reinsurance, or Lloyd's to back that product. Now, our go-to-market is unique from what you might have seen from other e-commerce insurance providers. And so, one, we have an omni-channel approach. In our broker portal, that's our wholesale channel, we've got about 2,300 insurance brokers who can log into the platform. They can help serve that customer. So these might be storefront kind of brokers that you might see in your local community. They're able to log into Apollo, get that quote and that policy for their customer. And our second channel is direct consumer, but unique in our approach is that we don't do a very expensive, pay-per-click and that type of advertising. What we do is we focus on embedding these insurance products into other companies who already have active user bases. So that might be other tech companies that have big users of small businesses. That might be REITs who have a whole bunch of renters that live in their buildings. We partner with them to cross-sell insurance into their market. Every time we sell one of these policies, we make about 3-5% on that transaction, and that's both new and recurring because in the P&C space, that policy is expected to renew, building a strong lifetime value from that customer. Now, as we know from impacts of COVID, buying online, natural trends, the world's moving to e-commerce. So as a Paul, we like to kind of compare ourselves to e-commerce businesses. And again, we target small insurance policies, but if you compare us to the e-commerce market, we actually have a really strong, fundamentals in our business. Our average transaction is just over $700. So it compares to e-commerce businesses. A high-performing e-commerce business might have an average transaction of about $102. And so again, a very high transaction, even though we're selling an intangible product. We have a 65% cart to purchase ratio, meaning if you get to the checkout page of an Apollo product, 65% of the time you're actually going to buy that insurance policy. I think that speaks to the user experience, the appetite for people to buy and transact online, and also the quality of the insurance products. Again, compares to other e-commerce businesses, with most have very high abandonment rate. The average cart to purchase ratio is about 23%. So high abandonments in other e-commerce products, very high conversion for Apollo. And one stat we love to highlight as our largest transaction to date is just over $12,000. So what this suggests is as we build more and more complex insurance products, more decision trees, and the algorithms become more sophisticated, we're able to sell bigger and bigger types of insurance to more and more complex businesses or serve more complex individual needs in the types of insurance that we offer. And insurance is really the ideal e-commerce product. Most e-commerce businesses have not a lifetime value. They're only selling one sort of item. So for us, having an 81% renewal rate is an amazing recurring revenue stream from these products, but also it's an intangible product in the sense that there's no shipping, there's no warehousing, inventory, manufacturing. We're not impacted by global supply chain, or this is, that kind of famous picture from the Suez Canal, manufacturing being interrupted because of COVID or other regions. We really have an unlimited product to sell, and we're able to deliver that product immediately and via email. Our product strategy in terms of the insurance products that we offer on our platform is really to become the everything store for the small transactional insurance. How we choose product, I think, is unique. One, we start with products that have large total addressable markets. So there's a whole very, very large number of health and fitness professionals. They all need insurance. So we say, well, great, let's focus on that underserved market because it has a large TAM. The second was we look at trends and we say, okay, there's a record number of pet adoptions because of COVID. There's a record number of boat sales because people aren't traveling internationally. Record number of 10 trailers. How do we launch product into emerging segments? We also know cyber liability and some of the emerging insurance products are new segments that we can then tackle because we have this broad entrenched digital distribution. And then there's obvious opportunities to cross-sell and upsell to existing customers. And so we recognize that if you're a renter and you add a wedding ring to your policy or you schedule a bike, there's additional products we can sell knowing, okay, we have a wedding liability policy, maybe you need life insurance at a certain point. So over time, we can cross-sell and upsell these different policies by really understanding our customers and using the data very effectively. And of course, insurance data is very rich. We own the data regardless of whether a person purchases that policy or not. And we know that 90% of the world's data was created in the last 2 years. And so being an early mover and having built all of our infrastructure, data-driven, cloud-based, we're able to really leverage the data effectively. And an interesting stat, just comparing what data can do in terms of customer retention, Netflix saves over $1 billion a year on retention. So because insurance is a recurring product, by using data effectively, we're going to be able to build a really strong lifetime value from our customers. And of course, from a product perspective, we have a very strong commission model. We make about 35% in commission and fees on the transaction. And so comparing us to other segments, it's a very, very high commission structure based on it being strong insurance fundamentals. In our wholesale channel, our B2B channel, our goal is to delight insurance brokers with incredible service and a fast way for them to serve their customers. So again, we've got about 2,300 registered insurance brokers across Canada who use our platform to quickly and efficiently get policies for their customers. We have a 90% customer satisfaction score, and we really focus on serving that broker as well, because they're kind of underserved in the smaller transactional space. And we've been able to sign up brokers at a steady pace and continue to grow this user base of brokers. Every individual broker manages up to $500,000, so they're a really great customer for us to have. And we're still really just scratching the surface in terms of the amount of insurance brokers in Canada is about 38,000, so lots of room for us to grow just in the broker channel. And almost all insurance is sold through brokers. They're in their community, they're entrenched, so we're giving them the tools and these products for us to be able to be successful serving that end customer. And in our B2C channel, our goal is to take those same digital products and partner with networks of existing customers and embed insurance into their workflows. I truly believe that small transactional insurance won't be bought and sold from a website in a 5 or 10 year horizon. It'll be included. And we're already seeing this with Tesla in California, including car insurance when you buy the car. Uber drivers are automatically insured when they turn the app on. So really the idea of including insurance and bundling it into other transactions, I think is an early mover advantage that we have at Apollo. So some of our partner targets are property management companies, prop tech REITs, other personal lines apps, university housing. And as a quick case study, we have a Canadian REIT, and they have a large number of renters that live in their buildings. 96% of new leases get a quote from Apollo, and 42% actually convert and buy customers. We provide that REIT with verification of the insurance, verification if there's a cancellation. So the REIT knows, you know what, everyone that lives in our buildings is insured. Apollo is providing the insurance and also verifying that. So we've been able to really come out and partner with some great organizations, be that Borrowell, University of Calgary. If you move into the dormitories, you get your insurance from the school, but through us in the back end. Rate Hub's been a great partner, and others where, whether it's mortgage tech, prop tech, or small business tech, we're able to help them serve their customer base better. We do all the licensing, all the call center, all the technology and insurance products. They have a great existing base of users and people that we can cross-sell to. So Capital Opportunities really only allows Apollo to continue to scale, continue to win the InsurTech space race, using our first mover advantage to stay out ahead of the market. The way that we create long-term, enterprise value in a significant or iconic Canadian business. One, insurance is a passive recurring revenue. Again, the industry average renewal rate is 85%, so there's a strong lifetime value from a customer. We know we can upsell and cross-sell using the data and using other digital distribution methods of us, not just insurance products, but also other products. We might cross-sell credit cards into our renters. We might cross-sell other SaaS products into our small businesses. And of course, the data set is very, very rich, and there's tremendous opportunities from the data as we continue building. From a leadership team perspective, I come from the insurance industry. I really was on the broker side, so I know the problems that we're solving. I know the industry inside and out. Tracy Swain, our CFO, was VP Audit at Lululemon and formerly CFO at O2E Brands, which is the parent company of 1-800-GOT-JUNK. Marco Indofato comes from a couple of the largest wholesale insurance providers in Canada. And Klaus, with his background as CTO and being involved at Realtor.com, which has over 1 billion monthly website visits, really we built a strong management team to execute on this vision and continue to accelerate the business. From a board perspective, one of our co-founders and chairman is Drew Green, the CEO of Indochino and a great Canadian entrepreneur. And we've got 2 insurance companies, Trisure Guarantee, as well as Liberty Mutual, who are both investors and participate on our board and are also suppliers to the business. So having them as strategic investors, supporters on the board, as well as suppliers is a great alignment and just shows it makes sense distributing product through Apollo. Thank you so much for the opportunity and for listening, and look forward to engaging in the future.